Hello everyone. This video is going to cover tax reminders and changes for tax year 2023. So first off, we have federal tax law reminders. The earned income credit and additional child tax credit returns are delayed just like they've been for years. February 15th is the day that the IRS will start processing them. We can e-file before that, but those returns, refunds will not come till probably late February, just like past years. And we just got to make sure we tell our clients. First-time homebuyer repayment, for those that remember that. Clients have been repaying this for the last 15 years. This is the last year. So we don't have a lot of them. We do have some. This is it. So last year for that. Coronavirus relief for retirement plans and IRAs. And all these things that are reminders. Obviously, there's a lot of people that are just starting to do taxes, and you might know something about this just because you started training in 2020 software. So some of this stuff might be relevant, and others you have no idea what we're talking about, but you can just ask questions if you need to. So this was a spread that in 2020 returns, the client could choose to spread the amount of their distribution from the retirement, their IRA or SEP or something, over 3 years. So last year was the last year of that, so we don't have to put that on the tax return this year. So that'll help some of our clients lower their tax liability. Above the line charitable contributions that expired in 2022, they can't, actually it might have expired before that. They can't take $300 or $600 on the front of the 1040. So only way you can do donations is if you itemize your deductions. Just want to remind you on that. Due date for 2020 tax returns. So we can go back 3 years to file a federal return. So if someone comes in here with a 2020 return, we actually have until July 15th of 2024 to file that. And if it's Michigan, you go back 4 years to file, so prior year returns. So just because during the pandemic, they extended the filing due date, so it's actually July 15th. So there's not a big rush if we have a 2020 return. We have till July 15th. IRA charities, this has been around for a while. It's good for our senior clients that are 70 and a half plus, and they give to charity like churches, but they don't have enough deductions to actually itemize. So if they want to take advantage of that, they can have some of their IRA go directly to the charity. You can have up to 100,000, but I don't think any of our clients are doing that. But I do have some clients that do this. It makes sense. So it just, that portion of the IRA would not be added into their taxable income. So it's a good thing. So if you have some clients that are of this age, they can do that with their IRA if they are donating to charities like churches typically. So it's a good, again, we want to do our clients' taxes, but we also like to provide some tax advice. So we're one up from a TurboTax, okay? Or actually, we're more than that. But anyway, these are areas where we can actually probably do better and actually give them some tax planning tips. Kiddie tax and taxable scholarships, just a reminder. And there's a practice problem on this. So if you're not familiar with it, you should definitely do the practice problem. So if we're converting some of our scholarships and making them taxable, so for the American Opportunity Tax Credit, usually it's on the parent's return, then that taxable portion goes on of the scholarship goes on the student's return, but we also have to see if the kiddie tax kicks in. So again, I'm going to refer you to that practice problem. Form 1099-K. So there was talks in the last couple of years that there might be a bunch of people getting a 1099-K, which basically just shows if you're doing Venmo or PayPal, the amount of transactions, the amount of money you received, you might get a 1099-K, and then how do you handle that on the tax return? Well, the IRS still they've delayed their plans on that, so it's still, you'd have to have 20,200 transactions. So most of our clients probably won't see this, but just someone might say something because it was in the news. But the IRS has not enforced it yet. But for 2024, they are going to lower it as of right now to 5,000. So we could see them going into the following year. My1040pro.com, what that is, I've had this subscription. I signed up for this years ago, just so you guys might be So you always had access to this, but probably nobody knows about it, but probably me. It's kind of cool. If you click on this link, so these are all these little things. So someone, say a client were to say, hey, I want to track my mileage. Well, you can come down here and what do we got? Auto record mileage trifold. So you could print this off, hand it to them, or maybe they just have, there's this Q4 newsletter, or they say, hey, I'm just starting a new business. What can I deduct? There's all kind of new LLC guide, new corporation guide. There's all kinds of little things that are, made in easy to read form for the average person. So take advantage of these if you need to, kind of like there's stuff about if they're doing charitable donations, it's a way of tracking their clothes and whatnot. So where this is located, obviously I gave you the link, but you're not going to remember that. So if you're inside of a client file, right down here, favorite links, it's right here, tax facts. Click on that, just click on one, whatever one applies. You got your W-4. We get a lot of people with that, like, how do I fill out my W-4? I can click this off, print it, hand it to them. That would give them some guidance. I can also email this because these are just links. So if I click on this and I come up in here and I copy my URL link here, I can send it to them as a text or as an email. So I don't actually have to give them a piece of paper. So this is helpful for everybody, not just tax preparers. It can be, even the phone staff. If someone has, questions about a business or something. Anyway, just wanted to point that out to you. It's available to you, so take advantage of it. Okay, now getting into some tax law changes, and they're right in the beginning here. We're just kind of giving you a little information about what's going on with the IRS. So they did hire a lot of new people. So I've noticed it for sure from what it was just after the pandemic. You could not get through to the IRS. No way. Even if I do it at 7 a.m. in the morning when they first open, I could not get into the phone queue. I can now. So this stuff, I just found this somewhere online, but I think it's probably pretty accurate. So average wait times are 20 minutes. I don't know if it's down to 3 minutes. 80% of callers get through, but the bottom line is we can get through now. We can help our clients. So again, we want to go the extra step. We might not be able to help them immediately, but we can call. They can call too, but sometimes they don't want to, but we can call and we can get through to try to help them out. So according to this, they're caught up with their 2022 returns. They've opened up some new centers to help the clients, the taxpayers. And now typically if we had to respond to an IRS notice, it basically would be mailing the notice back along with our documentation or faxing it. We still can do that because it's pretty easy to fax inside of Atom now, but they also there's like a QR code on a lot of the envelopes, the letters they get. They can actually upload the documents right to the client or to the IRS. I think they have to set up a My ID account or something to do that, but there's instructions in there. But anyway, just wanted to let you know that's what's going on with the IRS. Even though they have improved, they're definitely not perfect. So sometimes we're getting refunds that just aren't being issued for whatever reason. After, I believe it's like a 6-month period, if these clients still can't get their refunds, we can get the taxpayer advocate involved. So I've had to do that on probably 5 or 6 of my clients, and every time I've done it, it's worked. It takes some time, but it does work, and the client does get as long as they're entitled to it. If it's bogged down at the IRS for whatever reason, they just don't want to do their job, it's getting shuffled around, the advocate does work. So you can just fill out Form 911, and most likely it's just going to be myself or Ethan probably doing this because we're more familiar with it. Clients can call to get the advocate involved, and there is a phone number you could give them, or we can do it too while they're on the phone. Again, we don't want to just try to shove everything off to I want to try to help the client as much as I can. And now that the IRS has caught themselves up, we can actually get through to them easier, so it makes us look better if we actually help the clients. Again, I don't want to do it when I'm slammed, but you can put a little task to yourself and assign it out to March when you're slower, and let's help the client out. Interest rates are up, so that's up to 8% now. Why is this important? So when the clients owe money, when they file their taxes at the end of the year, if they owe more than 1,000 to the feds, IRS can hit them with interest and penalty because they want the money during the year. They don't want to wait till the end when they file their taxes and you pay it all. So now you got a little bit of a penalty for not paying on time, and now you got higher interest rates. So the amount's going to be higher. Also, if we make mistakes, the IRS will tack on interest and penalty if there's additional taxes owed. So now the interest is higher, and I typically will pay interest and penalty if it was our fault. So interest was always really low for as you know, for the last 20 years. Well, it's high now, so it's higher. It's even higher than some of the penalties. So obviously, we don't want to make mistakes, but now these mistakes are going to even be more costly. Not to mention, again, we can advise our clients. It may have been okay that you owed like 5,000 or 6. The penalty and interest wasn't that bad. It's going to be worse now. So again, let's do one up from just doing the taxes, and let's give them some tax advice too. So understand how this works. If you don't understand, when does a penalty kick in and when it does not, talk to a senior preparer, Google it. Mr. Google knows quite a bit, and it's pretty accurate too. As long as you have an idea about the tax law, you can find a lot of information online, and it is pretty accurate. Obviously, we're here to answer your questions too. Residential clean energy credits. So these are like your energy credit: doors, windows, insulation. Everything for the most part stayed the same, except they got rid of roofs. So we don't have to worry about the metal roofs anymore. That's not part of the credit. So the big change here is it has been, I don't know if it's been 15 plus years. It was $500 for the credit, and that was a lifetime. So a lot of our clients already exhausted that $500. Well, now it's $1,200 non-refundable credit, and it's an annual limit. So every year it starts over again. So this is a good change for our clients. So you might be seeing things where they're coming in with their windows and their doors. And we have that on the client info sheet as a check if they have any energy efficient purchases. The percentage went up too, so it'll help them get closer to that 1,200 limit. And it's no longer just associated with just your main home. Now you can have a second home, a cottage, winter home, as long as you're using it as a residence and not like rental property. Solar and alternative energy. This was around last year too. Basically, all it did is got extended to 2033. You might get a few of these, and again, if you do, go to the Quick Finder. I'm going to order those. Those are our little manual. I can't remember everything that qualifies. Same way with these plug-in electrical vehicle credits. If someone has one, if I do one this year personally, that's probably all I'll do. So I'll go to my Quick Finder book and just dig in and make sure everything qualifies. We probably won't get too many plug-in electric vehicles. One is, usually they're pretty pricey. And then, so if they are pricey, the purchase price might be above this dollar threshold here. Plus, they might make more money than this, so they're not going to be getting the credit anyways. But then again, I would just right here where I have QF, see the Quick Finder, or if you're a first, second year preparer, go talk to a senior preparer, and then we'll help you. But we're going to go to the Quick Finder also. And again, that's just our tax book that we use here in the office. Business meal deduction, it's all back to 50% like it used to be. During the pandemic, they extended that to 100% to help the restaurants out. Now it's back to just 50%. So obviously, we put the full 100% on the tax return, and then Drake cuts it in half. Entertainment is still non-deductible. I know some of our clients will say they're performing meetings now. It's not entertainment, but just so you know, entertainment is not deductible. The business mileage rate is up to 65.5 cents a mile from 62.5 cents, so that adds up pretty quickly. Child tax credit, additional child tax credit, still is $2,000 per child. They have to be under the age of 17. That didn't change. And what did change is additional child tax credit increased to $1,600 from $1,500. So a little bump there. And then the other dependent credit remains at $500. So if they're not part of the child tax credit, you get the $500. Due diligence penalty increase. So this is, these are all our extra questions that we ask for the earning when they have earned income credit, child tax credit. Make sure that child is supposed to be on that tax return. The penalties are steep. If you don't do that, make sure you do that. Make sure you document your answers. So it's $635 for each of the credits, which could be a maximum penalty of $2,450. And if you do get audited, the IRS will look at typically 25 returns you did. And if they find a lot of mistakes, they will keep it going until they hit 75 returns. You multiply that by 2450. That is a lot of money. Just do exactly the way you were taught, and you will be fine. So, and we have reviewers that are checking to make sure you're doing what you're supposed to be doing. So if you don't do what you're supposed to be doing, after we tell you several times, you can pay the penalties, not X-Tax. Bonus depreciation phase out. So I don't know if you guys are aware of this, but obviously for, it seems like at least 10 years now, and we've been doing depreciating property, equipment, computers, whatever. Basically, say you buy a $1,000 computer, you're set it up for depreciation. Well, the whole 1,000 you took right away because we had this bonus depreciation, which is roughly, it was 100%. Well, we're going to try to get back to the way it used to be. And so it's going to go down 20% each year. So this year you'll get 80% right off the bat as an expense that you can take. And then the other 20% of it would be set up to be depreciated based on the life of the asset. But just so you remember, and there's only probably a handful of people that are here that might know this because they were around for it. So Section 179 is what we used to always use when we wanted to go ahead and take that deduction, the whole 100%. That's still here. We can still use that. For the most part, most of our clients' returns that we're doing, their equipment qualifies for the Section 179 expense. So, and I'm going to pop in real quick to show you where that is. Let me log into Drake 2023 here. So if I go in here to Amy's file, go to my form 4562 for depreciation. Right here, it's under expense, EXP. That's a Section 179. So if I put a piece of equipment on there and I select that, it's going to go ahead and take the full amount, 100%. So now you got to start thinking, do I want to depreciate this or do I want to take the full amount? A lot of our clients like to take the full amount, especially, so anyway, we're probably going to be doing Section 179 a lot more than we have been. But that's how you would do it. All right, so let me move out of here. Student loan payments, that started up again after a 3-year halt. So we might get Form 1098, haven't seen that in 3 years. So that again, student loan interest is deductible as an adjustment on the tax return. Required minimum distributions, anyone age 73, it used to be 72, it was 70 and a half. So if your client is 73, they're going to have to take some money out of their retirement account. They can't just keep holding it. The IRS wants taxes. They want you to pay the taxes. So when you're at 73, our client, you don't have to remind them. I mean, whoever they have the retirement money with, they're going to send them letters. But just so you know, that is what the rules are. Of course, they can take the money out before that, but they're required to take a certain amount based on their age. This right here is new. Corporate Transparency Act, CTA. What that is if we have a corporation and we don't do a lot of corporate returns, so we're not doing a lot of 1120, 1120S's, we do have a handful, but we have a decent number of limited liability companies, LLCs, that are Schedule C type filers. Well, there's a requirement now that they have to report to FinCEN, and it's just giving them basic information like who are the owners, what's the company name, what's the EIN number, what's the address. So it's nothing difficult. The fines are pretty steep if they don't do it. $500 a day or 2 years in jail. So if you're a brand new business, effective January 1st of 2024, so I'm doing this January 1st right now. So if I started a new business, an LLC, I send my paperwork to the state of Michigan. So if you're talking to anybody, you need to let them know they need to do this. So they need to go to this site, this finsend.gov, BOI, and just fill out the information. Probably take them 30 minutes or less, and then they're done. And then I believe that's good for until they make a change. So it's a one-time reporting thing. So X-Tax, I'm an 1120S, I have to do it. So if I don't do it, I'm going to get fined. So I'm going to do it. Anyway, so if they're an existing, I have until the end of the year to do this. So we need to let our clients know, if you know they're an LLC and say, hey, did you know about this reporting requirement? Of course, you're going to say, I don't even know what you're talking about. Can you do it for me? And if we do it for them, I guess we got to charge them. So I'll let you know, but I'd rather just have them do it themselves. It's not really related to taxes. It's just that we see that client. So Drake did come up with a little checklist that we can hand them. So I'm inside of Drake here. If you go to Tools, Blank Forms, type B or do Control F, BOI, and this little beneficial owner information reporting. You can print this out to them, or again, we can PDF it, send it to them through the portal, whatever. This is just a way of they can gather some information prior to them jumping in. But from what I understand, I haven't done it yet. It's just very basic information, just information about the company and then about yourself, like where you live and the company's address. So it's really straightforward, but don't blow it off, okay? And so our job, again, we're just trying to advise our clients what they need to do. Just let them know, hey, you need to do this before the end of the year, and it's a brand new client. So sometimes we do help some clients set up. I usually get involved in that. I definitely will let them know what they need to do. So, all right, minimize that. Michigan tax law changes. And if you guys saw the letters that were sales led, I call them sales letters, we're sending out to our prior year clients. So my big thing was, big tax law change. Again, I got to throw some fear in them to get them back in here so they don't want to try to do this themselves. So my big thing was focusing on Michigan, because Michigan had some of the bigger tax law changes than the federal. And they're all positive changes. So meaning like they're going to either cut the client's tax liability or they're going to get, or both, and they're going to get more money. The client's going to get more money, basically refund money. Starting with the tax rate itself just dropped. So right off the bat, everyone's going to get a tax break. So every taxpayer should have lower taxes in Michigan compared to what they had the year before. So it's going from nothing significant, but 4.25 to 4.05. The exemption, what you can claim as a deduction, that jumped from 5,000 to 5,400. So that was a bigger jump than normal. But the big thing here for our earned income credit clients is, instead of it always, and I don't know if you guys are aware of this, but Michigan has earned income credit, and it's 6% of whatever your federal earned income credit is. So it's very straightforward calculation. Now it's bumped up to 30%. It's a 5 times increase. So it's pretty significant. So if I have a client who's getting $5,000 federal earned income credit, now instead of getting just a $300 earned income credit in Michigan, it's going to be a $1,500. So that's where I'm saying the refunds are going to be larger on Michigan. And because of all the tax law changes, that's where and I'm kind of jumping into our pricing for the orientation, but I am increasing the price on Michigan because of all the tax law changes to Michigan. Plus, the refunds are going to be higher. And the good news in this is they're doing it retroactive back to their 2022 returns. So we don't have to do an amendment. Michigan's going to do everything for us. So they're going to go back, anyone who got earned income credit, they're going to recalculate it and basically give them another 24% on their federal earned income credit. So in this example, the client normally got $300, now they get $1,500. So Michigan would send that person $1,200 check. And I don't think they're going to put any interest on that though. It'll just be a check, and they're mailing it all. No direct deposit. Even if they had set up direct deposit, state of Michigan is just going to mail the check to them. And I don't have an answer regarding if they moved. If they moved, obviously it's going to go to the address on file. And I'm assuming if we file a tax return prior to them doing this, their address will get changed. I'm going to a tax class later this week, and supposedly state of Michigan is going to be there and they'll have an answer for that. But as of right now, I don't have a 100% correct answer on that. So that's good news. The bad news is they're not going to do this retroactive checks until after February 13th of 2024. So because they had trouble passing this tax law and our state legislature, I guess, was dragging their feet, so it really will not, they cannot start processing these until February 13th of 2024. So then the checks are just going to go out. So we're probably going to get phone calls because, you know, somebody's friend, their neighbor got it before our client did. Then they're going to say, why did that happen? Can you help me? So I don't know what the window is to get this all done. Well, I'm sure we'll learn more as we get closer to that time, but the phone staff needs to be aware of that. They've already published it in the news. That was a couple weeks ago. I'm sure it'll come up again as we get closer to February 13th. So now we got confusion between the 2023 refunds coming along with the 2022 refunds. So again, it's going to be a lot of phone calls. And why are they sending me a check? Well, they're sending you a check because that's what they're going to do. That was their decision. They're not doing direct deposit of that money for 2022. Retirement and pension subtractions. So it's a very, I mean, the pension subtraction rule of Michigan is very confusing. All right, I do rely on Drake to cut through the confusion and then do the calculation. So there's tier 1, tier 2, tier 3, all this crazy stuff that goes on to figure out how much of my pension is taxable. So now they're trying to simplify it. So you're going to have your same rules as before, or you can have up to 25% of your pension may not be taxable, could be subtracted out. Drake's going to do it for us. Okay, so all I really need you to know here is that it's kind of be a phase in, 25, 50%, 75, and then 100% eventually of the pension should not be taxable, but Drake will do it automatically for you. Now, some of the government retirees might be able to subtract 100% of their pension right off the bat. I do some taxes for some police officers, you know, firefighters, retirees. So I don't know exactly where I'm going to put that in Drake to get that, so it's not going to be taxable. I'm assuming there might be some kind of a code. I don't know that yet. They haven't released the state of Michigan software for Drake, but I'll keep you informed as I learn more. But just so you're aware of that, these are the exemptions to the, or exceptions to the rule. Homestead property tax credit. So the taxable value of the house jumped up to $154,000. So if your taxable value of your house is over that, you're not going to get the credit. Doesn't matter how much you're paying in property taxes. Total household resources is now up to $67,300 before you get eliminated from the credit, and it does get phased into that too. Credit limit is up to $1,700 from $1,600, so a $100 jump there. This rule right here, which is fairly new, adjacent lot rules. So I have a couple clients that I do where, you know, I got the property taxes where their house is sitting, then they got a lot right next door, and I've always combined them, add them together to see how much of the property tax credit. I can't do that anymore. So unless there's a farm, unless that adjacent lot is zoned for agricultural, which it's not. So I have to tell my client, the few clients I do, sorry, you're not going to be able to get that. I can't lump that property taxes from that vacant lot into the calculation anymore. So I guess that rule went into effect about 4 years ago. I was not aware of it. I just learned of it this year. And I think I've sent in some statements to support what I did. And as far as I know, Michigan went through with it. So I don't know, maybe not all the people down at Michigan know the rule either. But anyway, that is the rule, so let's go by it. Home heating credit, that hasn't changed at all. The only thing is I want to remind you is that we did, like 2 years ago, if you got a home heating credit, then during the summer, I think that got up to like a $500 check. And then last year it was $54 check in addition to what they received when they filed their taxes. So even if the heat credit is small, like even as small as $1, make sure you put in for it because you never know what they might get during the summer. First-time homebuyer savings program. This is a Michigan program. It's just a way of saving money towards a new home. If someone actually does it or wants more information, I'll probably dig into the Michigan instructions. These are the basic rules right here. I think you can even do it for like a beneficiary. So if the grandparents wanted to do it for a grandchild, they could. But so it's kind of like the MESP plan when people put away money for college for their kids or their grandkids. You can deduct up to $5,000 single or $10,000 on a joint return. That's tax deductible on Michigan only, not federal. And then any interest earned on that money while it's sitting in there, you can back it off so it's not going to get taxed to Michigan. It would get taxed to federal, but not Michigan. So make sure you're aware of that. Installment agreement request. The reason I put this on there because I didn't even know there was. I assumed Michigan had an installment agreement request to have to pay if you owe Michigan money to pay the money back. So it's Form 990 is what it is. So if our clients owe a lot of money to Michigan, obviously they can always call them probably to get on the agreement request, but Form 990, I don't know if that's in Drake or not, but I'm sure we can download it if we had to. Just want to make sure you're aware of that. Transcripts, for those that work in the summer, you're probably more aware. I mean, so basically if a client doesn't have their W-2s, they want to file their taxes. I mean, this is like someone who's doing back taxes and they lost everything. So we can order transcripts from the IRS, and the transcript's just going to show you how much income you earn throughout the year, but it's only showing you the federal portion. Like, so if you had W-2s, it would show you the federal wages and the federal withholding, not any of the Michigan. And so we kind of just guesstimate on what we think the Michigan withholding is, and then when we put the Michigan tax return through. So it would be nice if Michigan had a transcript so we don't have to guess, but we can get W-2s from Social Security, or they can get W-2s from Social Security if they wanted to. Just wanted to let you know that. Refund delays, I already kind of told you about the 2022 retroactive refund that's going to be delayed. More importantly, is the 2023 tax year returns for Michigan will be delayed for the same reason, because of this law that got passed so late and doesn't go into effect really till February 13th. So we can file the returns, and we will file the returns just like normal, but we need to let our clients know, just like we do for federal, if they have federal earned income credit or child tax credit, that those returns don't actually get processed. That's federal for February 15th. In this case, it's February 13th, so pretty much the same time. So if they have earned income credit or a pension subtraction, these Michigan returns will not get processed until after February 13th. So again, their refunds probably, if they're due a refund, will not come until the end of February. So no early, even though it would be nice because the Michigan refunds are probably going to be larger for our low income clients, but they're not going to see anything till the end of February for Michigan also. Again, we just want to let them know that. I'll put it on the little letter, the little result letter that prints out of Drake, and also have it on the phone message, and we'll have it as some predefined messages so we can blast the client out when they ask us, where's my Michigan refund? But we're probably going to get more calls, but this is going to be your answer. And I'm hoping at least we're going to get an acknowledgement saying the return was accepted. I'm assuming we will get that, which we normally do from the IRS. It's just that, like the IRS site, they won't even. I mean, I think they say the return. I don't even know if they acknowledge that the return is really there, even until after February 15th. So, like when the client goes there to look to see what's going on, we get the acknowledgement that it was accepted. So I'm assuming Michigan might be the same, but maybe I'll learn more when I go to my tax class later this week. But definitely, you want to be aware of the refund delays from Michigan. City tax law reminders, subpay. Haven't had to really deal with that for a while, but now we had our GM employees that went on strike, laid off. So there will be subpay, and that's just supplemental unemployment benefits to help, give the taxpayers some more money. It's not taxable to the city. So years ago, it was very easy to identify subpay. It was a separate W-2. So Drake made it easy. We could just go into Drake and you'd put in SP for subpay, and then it automatically excludes it off the city return. Not so easy anymore because now it gets lumped in to the W-2. So the way we think it's probably going to be looking, and I'm going to go into my Drake 2022 because I don't have any city in Drake 2023 yet. So when I go into my W-2 here, I'm guessing we're going to have a dollar amount up here in box 1, and it's going to be different than a dollar amount down here in box 18. Problem is when you do the city return, Drake ignores what's in 18 and goes right off of box 1. So if I say if 5,000 here was subpay, and I want to exclude that so I don't have to pay taxes on it. Again, we're not talking huge money, but Drake's going to automatically take 55,000. So if I put SP in here, I was playing around with this today, it's going to exclude the whole 55,122. So that ain't going to work. So then I went to my Lansing screen and I went to the detail info tab and hit W-2 here, and I came down to line 18, excludable resident wages, and I put 5,000 here, and then I put subpay for a reason. So the subpay explanation shows up on the city return, but as of right now, the 5,000 is not being backed off. So this is something I'm going to have to give you more information later. I might have to report something to Drake to get them to fix it. Hopefully we'll figure out a way that we're going to handle subpay, and I'll just have to send out a message to you guys and say this is what we're going to do for subpay. It's almost like we're going to have to wait for the first W-2 to come in to see exactly how they're reporting it, but I just wanted you to be aware of it. Direct debit, just a reminder, again, we're trying to make things easier for our clients. Most things to be easier would be, why do I want to write a check if I owe $1? All right. Nobody writes checks anymore. Some people do, but not many. And just for a piddly dollar, they're going to forget most likely. So ask them if they want to do direct debit. So we seem to be very good at doing direct deposit for our clients. So the refund's going in. Let's offer them direct debit too. It makes it easy. I don't have to give them a payment voucher. And then it's one less thing they have to remember to do, and automatically come right out of their bank account. So that's and I'm going to show you quick steps on how to do that real quick as we jump into Drake here. So move this over here so I can still see it. So name and address screen, let me pull up Drake. Go into 23, nothing major change. They really didn't have any major changes. Just a reminder here, you're going to have, these are going to be no, most likely, no foreign accounts and no digital assets. I think it just changed how it worded here. Screen 2, dependents. It's nice and clean now, so it's not all crowded like it's been for the last 10 years. So what did they do? They got rid of the due diligence question. So I'm like, oh my God, did they shove it all in the 8867? No, they didn't. They put it on a tab, due diligence tab, right here. Here's all the questions that we had before that we crammed into one screen. Now it's nice. So it took me a while to figure out the macro, but I did it. So this is actually even nicer than it was before. So here's all my things I have to do, a checklist. But all you're going to do is pop in the screen like normal. I'm on the name, first name, Alt D. It's going to go to the due diligence page, check my boxes, then go back to the dependent screen, right to the very first field, and then from there you just depends on if it's you got a returning dependent or it's a brand new dependent. So that actually made it easy for us. So you just do the exact same Alt D for the macro, and you don't have a crowded screen. So that was nice. Next on the list here is direct deposit, direct debit. I hope all of you guys know this little shortcut. I just learned it, I think it was last year or the year before. So I just want to point it out. So in the DD screen, obviously if I'm going to say federal, I'm going to say yes, no, then state. Just come right down here. Instead of selecting Michigan, MI, and then LN for Lansing, just select A, and it's going to do all your states, all your cities that have a refund. So then you only have to fill out one bank account information. So I didn't know that for a while. So maybe there's still some people that aren't aware of that. The payment screen for direct debit, same thing. You can just select the A, and that'll be for federal and also, for state and for all cities. So a lot of times you have East Lansing and Lansing. So that makes it shortcut easier. Again, we want to ask for direct debit. Next, we have the tax return comparison. So when you review the return, which I know you guys are all looking at the comparison, because again, how do you know if it's a good refund if you don't look at last year? So you want to be aware of what you're saying before you speak. So the only way to know that is to look at the comparison. Please look at the comparison. And it's not just to say, do they have a good refund or bad refund? Did I miss anything? Did they bring me their Social Security like they had last year? Did they forget unemployment? Did they forget a retirement account? So this is going to help you to see, did they miss anything? Okay, so there's two reasons to look at this, but please look at it. So Drake added something here, which I thought was pretty nice. They're adding in the itemized deductions. I know we don't itemize that much, but I do have clients that, well, not a lot, but I do have clients that will ask, how close was I to the standard deduction? So I got to go in and check the box and then uncheck the box on Schedule A. And I've done it more than once where I forgot to go back to standard deduction and I actually filed it as itemized and I shortchanged the person. So it's easy to do. This way I don't have to worry about doing it. I can easily see, oh, your total itemized deduction, in this case is $6,675 and standard is $20,800. And it's nice for the client to see that. So they always are wondering, if I give you more medical, more church donations, they can see it themselves how far away they are from the standard deduction. So that is only going to be used for on the 2023 return going forward. So you won't have it on prior ones. Next is, lastly here is just the auto screen worksheet, which we use all the time for the Schedule C for people that are in business, but now we can use it on, and again, not that many people are doing these other than myself. Ethan's involved in doing these returns too, 1120, 1120S and the partnerships. If there's anyone out there that wants to do these, let me know, because I'll definitely show you how to do them. Anyway, the auto screen worksheet you can now do on those returns as well if it's needed. And that is all I have for our tax law changes and reminders.